Nigeria's return to the Eurobond market comes at a time when global interest rates have begun to ease and investor appetite for emerging market debt has strengthened. But there were initial concerns over the performance of the bond after U.S. President Donald Trump threatened military action in Nigeria over alleged Christian killings. However, those fears would vanish into thin air as the bond ended up being oversubscribed by more than 400%.
It's a testament to continued investor confidence in our country and our reform agenda and Mr. President's leadership, despite the political headwinds which we are all aware of. The market shrugged off those political considerations and focused on the economic fundamentals of Nigeria.
And it's not just foreign investors who have shown faith in the Nigerian economy through the government paper. Nigerian investors also staked around $1.4 billion in the bonds, also demonstrating their confidence in the economy and government reforms.
So for the investors, they're looking at a Nigeria that is no longer paying huge amounts of dollars as PMS subsidy, and it's no longer defending the Naira with so much of its foreign capital. So that opens up the Nigerian budget to then take on more debt, which is what we've done. The rates are a bit high, but that we're able to borrow this amount and get the oversubscription is also positive. So I would say for now, a balanced view, I'll give it a B. It shows that the international community likes the reforms.
And with the window of cheap borrowing likely to close soon, experts say Nigeria must move quickly, not just to borrow, but to build as there are risks involved.
The main risk is repayment risk because we are borrowing in dollars and we're borrowing at, as you said, 8-9%. We're going to pay back that dollar from oil sales because Nigeria really is a mono economy. We make the bulk of our oil revenues from exporting crude oil and oil-related products. So what happens if oil goes to, say, $40 or $50 a barrel? Then we're in big trouble.
The truth is that if we don't maximize the resources that we have, especially the borrowings, then we are just creating burdens for those coming behind us, and that's not sustainable.
Beyond Nigeria, several other African countries, including Kenya, Angola, and the Democratic Republic of Congo, have also issued Eurobonds in recent weeks, taking advantage of strong investor demand for higher-yielding assets.
Investors are now open to investing in bonds that are not US dollar denominated, want to diversify away from the US dollar because of the tariffs and of course the fact that the US is able to sanction you and hold your foreign reserves. So folks are looking to invest in a different currency that is not the dollar. That's the overall conditions happening. So when Angola, when Benin, when Congo comes to the market, there are also emerging markets offering very, very high yields that allow diversification away from the dollar. Hence, you see the strong demand for those currencies, for those bonds, for those equities.
The Nigerian Debt Management Office says the bonds will be admitted to the official list of the UK Listing Authority and available to trade on the London Stock Exchange's regulated markets, the FMDQ Securities Exchange, and the Nigerian Exchange. DG Badimasi, CGTN, Lagos, Nigeria.